I'm Joshua Roberts of BizNews, and with me is Sasfin Securities' David Shapiro. David, we all saw you tweeting away during the festive period. I guess do what you love and you'll never work a day in your life. There's a host of interesting developments since we last spoke. Many of the same issues remain, that is inflation, supply chain problems, and labor disruptions. There seems to be a lot of uncertainty. What's your general take on sentiment in the market at the moment?
I think it's going to be tough. And for no other reason, when I say I'm not negative, I just think we're just going to have to work through the short-term news. And there is confusion. Investors are uncertain and confused about what the Fed is going to do, because when the Fed minutes came out last week, there was a suggestion. If I'm slurring, I went to the dentist, so it's not because I've been drinking, so I apologize in advance. But when the Fed minutes came out last week, there was a suggestion that they're going to accelerate tapering, and it also pointed maybe towards raising rates a lot earlier than the market had expected. And this was reinforced by the job numbers that we saw. The same thing, wages were going up, unemployment coming down, even though the absolute number of wages was below expectation. So the market's starting to build in that, maybe this is the surprise factor. This is the negative news that we hadn't built in or hadn't discounted, that we're going to get rate rises ahead of time. But Justin, what rate rises? Are we going to get rates going up to 3-4%, or are they going to just gradually creep their way up to 1%? Because at those kind of levels, we can handle it if there's not too much disruption in the market. So I'm saying that's what we've got to work through. That's the uncertainty that we have to kind of discount.
Let's touch on the 2022 Cristal Challenge. 75 participants, each choosing 5 stocks in an equally weighted portfolio. Purple Group, City Lodge, Sasol, PPC, Process, and Sabanya were among the most popular stocks. Any surprises from your side?
No, I'm absolutely fascinated, because I started this almost as a joke a year ago, but everybody's taken to it. And Justin, what comes out of this is that do not downgrade or underrate the intelligence that goes into some of those picks. People, even though they're not putting hard money, they've thought about these stocks, and I'm fascinated by where they think the growth is going to come this year. Pit Viljoen is always a delight. He chose the Rebosis A. I didn't even know Rebosis A existed. I knew Rebosis, but and of course it points on towards it'll all come out if there is a deal done. Big money can be made. So I'm watching this absolutely fascinating challenge by how people think and where they would put their money in. But that's fun.
What were your 5 picks, David?
I'm trying to remember. I'm trying to recall. I know the JSE was one. I tried to find some financials that were underrated, that had been ignored. I still like cash build, because I think a lot of money is going to be spent on building this year. Spur Group, that was my consumer stock. Hopefully that people come out and start spending. These have been under pressure. And to be honest, I can't remember the last 2. I'll have to pick them up. But I'm an outsider completely. Some of the people coming in there are so smart and have done their work so intelligently. It's great.
Steinhoff always gives us something to talk about. One of its subsidiaries, the mattress firm, is going public again after Steinhoff bought it out for $3.8 billion and delisted it in 2016. The market's now valuing Steinhoff at around 25 billion rand. That's the same size as Pick n Pay or an AVI. Yeah. Now that there's more transparency for the road ahead for Steinhoff, do you think there's some promise in this turnaround story?
I hope so. I don't like to see companies go to the wall. I know they've still got a lot of issues that they have to negotiate, particularly debt. And also what you need is, what are the substance, what are the structures of this new company going to be? At the moment, it's mainly Pepkor. I don't know what else remains in there. I don't know whether Conformarama is still there. I'm not quite sure whether what remains has the really the foundation to build another big business. But what you say is so true, that the company has now sparked up from a market value of what was around 4-5 billion, or even lower than that, to 25 billion. You're now starting to talk about a company, big company again. And I was looking at the share price, and to see the recovery that has been made, and a lot of people are backing this kind of recovery in Steinhoff. So let's see, credit to management if they can bring it back to life. You've got to, there's been a lot of hard work. They've worked hard. They're getting rid of the debt and some of the claims, which I also think are not easy. It takes a lot of effort and a lot of paperwork and a lot of emails to get to where they've got to at the moment.
I see a lot of outspoken value managers on social media following its outperformance versus growth in the first week of 2022. All the economic indicators are pointing towards value outperforming growth this year, but whether that actually happens remains to be seen. How are you reading the argument growth versus value at the moment, David?
Yeah, I don't know whether it's really, value. It's companies that have been ignored during the lockdown. And, if we do get normalization, which I think we're going to get, because we've overcome a huge number of issues as well, these businesses will spark back. Justin, the question is, for how long? In other words, are you going to ignore a lot of the growth IT businesses that are going to really be the substance of our lifestyles in the years to come? 3, 4, 5 years, we're going to be using these companies still. Or are you just going to push them aside for value? So I suppose this short-term plays in this value versus growth. I'm very glad if some of those companies do come back to life. But I mean, I'm still remaining. I still believe in a lot of the growth stories, and you just got to get through the cycle. I like to say, what's going to be there 3, 4, 5 years down the line? What are those businesses that are going to change the way that we live, change the way that we, our spending habits, and that's where I still want to be. But you do take pain, and you take a little bit. Just in the big one, I think the big issue at the moment, and I'm finding it fascinating, is this whole renewable energy story and the shift towards investment in renewables versus the old, fossil fuel and coal and so on. Well, sorry, coal is fossil fuel, but I mean it's that issue, and I think if you're a value player, I think you're going to make money in energy stocks. There's still a play in some of those because money is not being spent on developing those businesses, but they're still going to make, you still need them at the moment. So that to me is the fascinating panel. I like to watch the social media, and the two sides have a go at each other. So yeah, still lots of things to talk about.
That value energy play is a pitfall yin classic. Oh, David, all the finance textbooks I've ever read taught me that gold was an inflation hedge. Now, with inflation at its highest level in 30 or 40 years, gold is unchanged over the last year or the last 12 months. Were my lecturers lying to me?
No, I was going to bring that up if you didn't. And the same thing we've seen in some of the cryptos as well. Bitcoin has not performed the kind of performance that we thought it would. We haven't seen the gains that we thought we would when inflation started. And we're getting an inflation number coming out sometime this week, and that's what's really scaring markets at the moment. Everybody's worried it's going to be a 7% number, which is going to be the highest that we've seen in many, many years. So it's still scaring people, and yet gold has not done anything, nor have the crypto. So I gave up gold a long time ago. I gave up as a hedge a long time ago. And when I was involved in gold, it was mainly gold was actually fixed and it was rising. I'm going back many, many years. But there we used to buy the mines for what they produced and how efficiently they produced it. Now it's a different kind of play. But it hasn't performed the kind of role that we thought it would. I'm in line with you. I think you've got to take this into consideration. It's a worry.
Are there any safe haven assets these days?
No. And that's a lesson. There are no safe haven assets. every asset has a risk profile attached to it. If you buy bonds and rates go up, you lose money. If you buy equities and earnings fall, you lose money. There's obviously the vice versa as well. So I think you've got to be very careful, and that's why when you've got money and when you put money away, you've got to treat it like a business and watch assets and don't be attached to anything. Don't come too attached to that. But it's a very valuable point that you bring up, because so many people say, I'm a gold man, or I'm this man and that. I think you can't package yourself. You've got to be very open-minded when it comes to investment.